Okay, let's go.
In trading, an A-plus setup is a specific, high-probability structure that helps you filter out the daily noise of the market and focus only on the best opportunities. This split screen shows exactly why structure matters. On the left, you see a chaotic charting interface buried under overlapping indicators, making price action almost impossible to read. On the right side, you see a clean, simple interface utilizing just the price candles and a single structural line. But understand that even when a setup is completely clean and checks every single box, it does not guarantee a winning trade. The market is ultimately a game of probabilities, which is why risk management must be your top priority. Today, we are going to break down the complete 3-touchpoint trendline break setup. We will go step by step through the entire playbook, establishing the exact rules for when you enter the market and exactly when you exit. Relying on a strict, mechanical process like this removes emotional guessing from your decisions. It gives you a repeatable system, and that consistency is the only sustainable way to protect your trading capital. Step 1 is identifying the overarching market momentum. We do this by finding the trend, drawing a line that connects either higher lows if the instrument is pushing upward, or lower highs if the price is dropping. Look at this simplified chart showing downward price action. A drawn line is only valid if it connects to exactly 3 distinct price peaks. You must manually count these points. We have a touch point here, 1, another here, 2, and our third touch point here. At this stage in the setup, this line has no special designation. It is simply a visual observation confirming that the current price is trending lower. Strictly enforcing this 3-touch minimum prevents you from drawing arbitrary, hopeful lines on a messy chart. It forces you to wait until market structure validates itself before you even consider a trade. The core execution philosophy of this strategy is reaction. We never try to predict or guess what the price will do next. We simply wait for the market to move and we react to it. The specific condition for entry requires you to wait for a price candle to physically break and close completely past that established trend line you just drew. Watch the chart. Instead of respecting the trend, a new price candle pushes forcefully upward, breaking cleanly through our downward boundary. This breakthrough officially renames our generic trend line into the action line. This visual trigger is your direct signal to enter the position. Waiting for this physical break ensures you are acting on confirmed market momentum. You let the buyers prove they have control before you put your money at risk. Immediately after your order is filled and you are actively in the trade, you have a mandatory next step. You must establish a new structural boundary to manage your capital risk. You do this by introducing a safety line. This is an opposing trend line that tracks the market's newly established upward direction. As price continues upward from your entry point, you plot this opposing line directly underneath the new price action, connecting the new higher lows. This red safety line serves as a trailing net. As trade progresses higher, this line visually defines where you are protected. Deploying this safety line right away is your ultimate defense mechanism. It guarantees you have a strict exit plan drawn on the chart before a small, routine pullback can morph into an account-draining loss. During the active holding phase, your job is simple. As long as the price continues to bounce off that safety line, you sit on your hands and remain in the position. But the absolute exit condition is non-negotiable. The exact moment a price candle drops below that safety line, you must close the position immediately. On the chart, the price action drops, slicing cleanly down through our established risk boundary. This line break completes the entire trade cycle. The transaction is fully closed, and the space between your green entry and red exit safely captures the profit. Executing this exit with zero hesitation the second the line breaks is the definitive behavior that separates disciplined, profitable traders from people who gamble on hope. By identifying 3 touch points, waiting for the action line break, drawing your safety line, and exiting on the break, you have executed a fully complete round-trip transaction. This 4-step mechanical process removes all guesswork from the equation. But we have to return to our reality check from the beginning. Even textbook setups executed perfectly will occasionally reverse and result in a loss. Markets are fluid, and price action can turn aggressively. When a trade goes against you, that strict safety boundary is the only thing standing between you and disaster. ensuring you are caught and supported before the loss spirals. Your homework is to open up your own charting software right now. Scroll back through the historical data and manually locate 3 different instances of this exact setup to train your eyes to identify the lines. Make sure to subscribe to the channel and turn on the notification bell so you don't miss our future videos covering more advanced playbooks and complex timeframe setups. Mastering this single, straightforward setup builds the critical structural discipline you need to eventually tackle the most complex strategies the market has to offer.